Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those of you joining for the first time, I'm responsible for analyzing and identifying digital assets and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, it has been quite an interesting week, guys. We're going to get started this week with Makerdale. So I know I talked about this one like 2 weeks ago, but they've really had quite a bit of stuff going on that definitely warrants some discussion. So Makerdale, for those of you who aren't familiar with it, they're a decentralized stablecoin issuer. So they experienced some upheaval following the founder of Makerdale, Rune, his name is Rune, posted a controversial endgame proposal to split Maker into various sub-DAOs, among other changes. So as of yesterday, the proposal passed in a controversial fashion as Rune accumulated more than 60% of the vote via delegates. So basically the way that Makerdale voting works is that if people want to, they can delegate their tokens to others to vote on their behalf. So a large portion of the vote ended up delegating to Rune. Some people actually decided to come out against Rune and vote against him. So for example, A16Z, I believe they have like 10% of the token supply. They chose to vote against Rune and put out a very clear and concise statement why they didn't agree with the proposal. And there was a lot of pushback in the community over this. But basically, a lot of people really believe that, unfortunately, a lot of large holders also didn't participate in the vote. They were just like passively holding, which kind of led to this negative outcome. And so a lot of people are calling it, decentralized governance. It doesn't work. It's dead. We're saddened to kind of see this outcome because we want to see projects kind of push forward in a more decentralized fashion. Not have the founder necessarily like centralizing all the voting power around themselves. So we'll have to see what's next for Makerdale. This is definitely going to change the outlook for the project and its roadmap in the long term. Following this, Makerdale's down 15% on the week. All right, next up we have Polkadot. So Polkadot is a layer 1 protocol founded by by Gavin Wood. So Gavin Wood actually announced last week that he'd be stepping down as the CEO of Parity Technologies, which is the company behind Dot. So Gavin Wood is also one of the Ethereum co-founders. He started building Polkadot in 2016 as an improved version of Ethereum. However, after launching in 2020, Polkadot has yet to gain meaningful traction compared to its peers like Solana, Avalanche, and Binance Smart Chain. So for those who've been around for a while, Polkadot made a lot of headlines in 2017. They raised a lot of money from a lot of people. A lot of people kept saying this is going to be the Ethereum killer. And, they took a little long to launch. They ended up launching like end of 2020. We already had alternatives out there like Solana, Binance Smart Chain, and those were already offering kind of like the higher throughput that were promised. While Polkadot does definitely focus on decentralization, they've definitely been behind in terms of like gaining traction, getting projects onboarded. So Wood is actually going to transition to chief architect, and he's going to focus on building several social alternatives that should help further Polkadot as a Web3 platform. So definitely be something to watch. Going forward, as I said, the direction of Polkadot might change. Or maybe it will be reinvigorated by the change in leadership. I guess we'll see. The market thoughts this might be beneficial though because it's up 4% on the week. All right, next up we're going to talk about Aptos. So if you didn't think I was going to talk about this one, well, you were wrong. Aptos, for those of you who are not familiar, it's a layer 1 protocol and it just launched last week. It made a ton of headlines, a lot of waves. Because immediately after announcing their launch and token generation event, their token was listed on 3 major exchanges. So the launch comes after Aptos raised $350 million over multiple rounds from venture capital firms such as Coinbase, ftxus, Finance, A15, Multicoin, and others. So Aptos is basically like they promised to be a Solana killer. They promised high throughput transaction speeds. one of the founders is actually, or the founder is actually one of the creators of the DM blockchain that Meta or Facebook was trying to build. If you guys remember that, like in 2019, 2020. So, what's really raised, I guess, the ire of most people is that, usually, listings for new tokens, they don't happen as quickly as they did here. And the exchanges that listed the token were FTX, Binance, Coinbase, which were all investors. So not only does it say, hey, there's probably like a conflict of interest here, it also kind of brings up the issue of, should there be kind of like this commingling? Additionally, the exchanges didn't provide any tokenomics or supply data prior to the listing. And neither did actually Aptos at first. There was definitely a lot of people calling them out on Twitter and in the crypto space saying, this is unfair to retail investors. You're essentially like giving an opening for the early stage VCs to dump on retail because they would be, anybody who was purchasing these tokens on the platform would have no idea what the overall float was, the supply, how much they were, giving. They did give out a lot of tokens to people who use the incentivized testnet, but such a large majority is really owned by those early stage backers that, like I said, it just drew a lot of kind of ire from the community. So like I said, I think it's a good example of why there should be transparency among digital assets and the crypto community. With all this activity, trading for Aptos last Wednesday at $10. It declined to about $7.50 and then has since rebounded to $8.80. So it is technically up 25% on the week. All right, last up we have HEGIC. So HEGIC is a decentralized options protocol. They announced yesterday the launch of its HEGIC Purge protocol upgrade. So basically, this was like a set of like big upgrades for this options protocol, which had, to date not gained a ton of traction, had kind of lower liquidity, and like most decentralized derivative platforms, suffered from a lot of the issues with like front running, order books on chain, and a lot of kind of issues that happen with the lower speed protocols. So basically during this beta testing phase, the protocol was able to earn over $400,000 in positive P&L, which is claimable by HEGIC token holders. So that's kind of awesome because this is just a beta testing phase. Other features include a completely Arbitrum from Ethereum. Arbitrum is an layer 2 scaling solution on Ethereum, for those of you who are not familiar with it. And they introduced a new feature that uses HEGIC as collateral in the protocol, and finally launched a new trading interface. So, with all this great news, HEGIC ended up flying, going up initially 240%, and it is up 157% on the week. That's all I got for you guys this week. Thanks for joining. I hope you enjoyed our insights. We'll be here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.